Okay, so welcome all of you. Today is the first session that we are starting, one among the 40 sessions that we have planned. And the topic for the day is two topics that we want to cover. Understanding basics of accounts and understanding basics of TallyPrime as a software. Okay, so this understanding basics of accounts, those who have come from the commerce background, probably, I believe that probably, okay, all of you already know all these things. Okay, those who have come from non-commerce background, non-accounting and commerce background, for them it would be really helpful. So could I know how many of you are from non-commerce background? Can you put it on chat saying yes, I am from non-commerce background, so that we get an understanding of how many of you are there from non-commerce background. So you could use the chat in between if you want to put any, raise any questions of yours, so that at the end of each topic, we will look at all the chat messages and we will try to answer those things also. Is my audio clear? Is everyone getting my voice, and is my screen clear? Is everyone able to look at my screen which is shared? Okay, thank you. Okay, so since I have not got any confirmation on the participants who are from the non-commerce background, I believe every one of you are from commerce background. This makes my job also very simpler. Okay, so let us just go and try to understand the basic concepts of accounting. So what we have done is we have just given you an basics of this to understand what do we want to look at when we say accounting. So what is basically an accountant doing? What is accounting basically? So to put it in concise, it is just we are looking at the business transaction, we are classifying it into different kinds of transaction, we are recording it and reporting. Okay, so that is what we are actually doing. So typically an accounting is an post-mortem work where the business transaction is happening or it has already happened and we are recording those things. Okay, and generally the accounting is for a period of time. So it has a start date and end date. So for that particular period, the accounting will be maintained. Okay. Then what are the objectives of financial accounting? Why the financial accounting is maintained? So any business for that matter, okay, it is established ultimately for making profits, for earning money. But during the course of the time, while the business is established to earn profits, there are certain times that the business will also get into losses for various reasons. So the record is kept to track and to analyze whether the business is really making profit or it's sustaining loss in a given period of time. And there are various stakeholders in any of the business. If you look at a business has an owner or owners, basically based on the type of the entities, the business deals with suppliers, the business deals with customers, the business deals with government, the business deals with bankers. The business also requires to give the information to employees or for various aspects. So there are multiple stakeholders in any business. So one of the things is the accounts is maintained to ensure that relevant informations, accounting, financial informations are being provided to the stakeholders whenever they seek for. Okay. So this is one of the objectives in which for which the financial records are kept. So it covers everyone. It covers owners, it covers suppliers, customers, government. In most of the statutory things that where you deal with the government, you need to ensure that statutorily you are obliged to provide all the required information. Or it might be your internal stakeholders like your different teams. It might be a sales team, it might be your purchase team, it might be your employees. Okay, it might be your strategic people, it might be your chartered accountants, lawyers, various stakeholders who are there, part of it. So you might have to give the financial information at either at the regular period or on as and when the requirement comes up. Okay. So if you're clear on this, then we could move to accounting terms. Who is an accountant and what does he basically do, or what does that accounting terms of an accountant means? An accountant, okay, so there are some mistakes in this statement, but let me just tell you with respect to account and an accountant. So there are two aspects of it. One is account and one is an accountant. What is account? Account is in any stakeholders recording of this transaction of that stakeholder, which is typically kept in the books of accounts, is called an account. For example, it might be a bank book, where basically I have a bank account and I maintain a bank book, or it might be an asset statement that I maintain, or it might be my supplier statements that I maintain, or it might be a loans and liability statement that I maintain, or it might be an income statements or an expenditure statements, my sales register or my purchase register. Okay, or it might be an individual ledger account statement that I maintain, or it might be a bank reconciliation statement that I maintain. Okay, so these are all comes under account, and this it's very important that a business maintains these accounts based on the transaction that has happened for a particular period. So in a broad way, we classify for the accounting purpose, we classify the accounts into four different heads. One is called asset, the second is called liability, the third is called income, and the fourth is called expenditure. Any of the account you take should ultimately fall in any of these four heads, period. Either it's an asset or a liability, or income or an expenditure. Okay. So just to give you a brief of what is asset, liability, income, and expenditure. Say in a crude way, if I want to tell, you could always go and Google it and find the definitions for each of these things, while the information is already available. In a layman terms, if I want to understand, what is asset? Asset is a purchase that I'm making, okay, where I use this product for my business over a period of time. Okay, so example for an asset is I purchased building. So I just paid 50 lakh rupees and I bought an office space. It's an asset because when I buy this asset, when I buy this building, the utility of this building, the usage of this building is not for one specific financial year or not for one specific period of time. It's not for 1 quarter or 1 year. We continue to use this office over a period of next 10 or 15 or 20 years, which is beyond one accounting period. So this, you can take it as an example of an asset, or you can say a motor car. Okay, so you have purchased a car for your business purpose, and that car is being basically used for next 5-7 years, which is beyond one accounting period. So any purchases that you make and utilizing that over beyond one financial period, you basically classify that as an asset. Okay, and of course, under asset, you have various classification as fixed assets, current assets, okay, investments, various things. Okay, but generally, you need to understand it's any purchases that you make where the usage of this purchase is beyond one financial period that you have set for. Similarly, liability. Okay, liability is basically what I owe to different people. Okay, where the liability rises over a period of time. Okay, so that is what we need to understand. Either it might be a capital item. Okay, it's a capital account where the investors have invested, the owners have invested their money. Okay, or it is a loan that I've got from an outsider or from a bank, or it might be either a secured loan or an unsecured loan. Okay, or it might be a payment that I'm liable to make to a supplier. Okay, so all these things and various other things come as part of my liabilities. So liabilities means which the business has liable to pay is typically a liability. Okay, then comes the income. What is income? Anything that we earn for business. It might be a sale of a product, sale of a service, okay, or income on any investments that we have earned, interest on the investments that we have earned, or it might be a dividend on shares that we have earned. Okay, anything that comes as a revenue, or you could call it by different name, call it as revenue, where you are actually earning for the business, comes under your income. And all the expenses that you are making, okay, which is typically an expenses which is time bound to run your business. Okay, say example, it might be an electricity payment, electricity usage in your business, or it might be an water expenses, or it might be a telephone and internet expenses, communication expenses, traveling expenses, which you are spending money to run your business, rent for the accommodation, okay, or salaries and wages that you are spending. These are all the expenses that you are spending for during that financial period, where the liability of that is during that financial period. Okay, where you are spending that money becomes parts of your expenses. So that is how you actually draw your final statements. So if it's an income or expenditure, it comes under your profit and loss account. And if it is an asset or liability, it comes under your balance sheet. So that is how your statements are driven. Hope this is clear, because these are all the basic things. I know most of you would have studied this in your first year of the commerce or in the early high school days, but understanding and having these terms is very important as we move forward. Okay. Then comes accounting terms. Under accounting terms, it is the accounting period. What is accounting period actually? So typically, when you are writing a books of accounts, you should be very clear as to what is the start date for this books of accounts and what is the end date for this books of accounts. So the accounting period can be any period, any start date and any end date. There is no mandatory rule that it should be only 1 month, 1 year, 1 quarter, 1 week, nothing like that. Typically, it can be any period. Any period which has a start date and end date is the accounting period that you could use. Okay, it might be an year, it might be a quarter, it might be a half year, it might be a monthly, it might be weekly, whatever the way you want. But as we follow the Indian statutory norms, we should understand what does the law say. According to Indian statutory norms, the financial period for all the entities that operate in India it has been specified the financial year starts from 1st of April and ends of 31st of March. So it is one financial year. So it always starts on 1st of April and you have to end by 31st of March. Say example, the financial year from 1st of April 2021 to 31st of March 2022. Okay, or you could say from 1st of April 2022 to 31st of March 2023. For statutory purpose, this is the financial period that we need to follow in Indian statutory for as per the Indian statutory requirements. Okay, but as we say, it's an Indian statutory requirements, but you would come across in most of the business, you would come across, okay, your bosses or your owners or your managers or to whomever you are reporting to will be asking reports for a quarter. They'll say, okay, you give me a profit and loss account for first quarter, or they will say you draw a fund analysis for April month. Okay, or somebody will ask, okay, give me a trial balance as on 31st of May, any particular date. So which has typically a start date and an end date, but these are all your internal MIS requirements. It may not be a statutory requirement, it's in your internal MIS requirement. Okay, it might be from any period to any period. But of course, after the introduction of GST, okay, now the GST, you have to file your GST returns either on a monthly basis or on a quarterly basis, in whichever the way you have registered with. Okay, now for that reporting purpose, you could say, okay, that period forms an accounting period. Say like example, if in my business, when I'm filing my monthly returns for GST, so every month is a period for me, accounting period for me, because for this month, I need to collate what is my total sales that I have done transaction wise. I need to collate all the purchases that I have done transaction wise. That is what I'm supposed to report as a statutory norms to GST department. So this is very important that you need to know what is your accounting period that you follow. Hope this is clear. Could we move forward? Next comes entity. What is entity basically? See, this is where you need to be little careful. Okay, especially if you are into a small business and if you are a proprietor, okay, or a partnership firm basically. So you need to understand business is a separate entity and me as an individual. So I might be the owner of a business. I might be the sole proprietor of my organization. Okay. Or I might be a partner in my organization. There are few more partners along with me. But me, Mahesh, as an individual is different and the business entity is different. Okay, so the business entity is a legal entity and it has a separate existence. It's like a person, it has a separate existence. So example, if I form a private limited company, okay, and I invest 10 lakh rupees in this private limited company and I start a business, I might have 25 lakhs of my asset value, but out of that 25 lakhs, I've just invested some 10 lakhs to do this business. So there are two persons here. One is Mahesh as an individual and Mahesh as a partner in specific firm. Okay. So typically when the business is registered, okay, whether you register as an individual or a partnership or company, private limited company, public limited company, whatever, under whatever law that you want to, that becomes a separate entity. Okay. Now example, I'm a partner in ABC company ABC Traders. Okay, it's a partnership firm. Now in this ABC Traders, they open a bank account in State Bank of India. Okay, and I'm one of the partners. I have a bank account in HDFC Bank. Now, either I might be a signing authority in State Bank of India or not. That depends on the organization structure and how do they do. But when I file my income tax returns, so there are two things. One, as a partnership firm, the income tax returns are filed, and as an individual, an income tax returns are filed. When I file my income tax returns as an individual, I will never take that State Bank of India bank account into consideration, because that doesn't belong to me as an individual. That belongs to an entity as ABC Traders. Okay. So there are two things. One is Mahesh as an individual is filing his income tax. Partnership firm ABC Traders is filing as a partnership firm. But whatever the profit that I have got out of this business, that I would have included in my individual statement, individual tax statement. So it is very important that we maintain partnership books separately. Example, the ABC Traders. So here, if you look at, so I've just given some of the examples, the legal entities. Okay, say example, it might be a Sri Durga Gas Agency. Okay, so it might be a proprietary or a sole person who is handling this. It might be a proprietary concern, or it might be a transcall which is into partnership, or Wigwin Trademark, which is into a private limited company that they have registered under ROC, Register of Companies, as a private limited company, or it might be Ganesha Enterprises Limited, which is a public limited company. Okay, or it might be a trust, or it might be an NGO, whatever, in different kinds of statutory norms that was registered, but these are all separate entities, is what you need to understand. So we will be maintaining the books of this entity, not an individual. So all our, when we start maintaining the books of accounts is for entities, is what you need to understand. Hope this is clear. Okay. So once when you have understood what is entity, next comes transaction. What is a transaction? Okay, so in simple terms, those who are already using a Tally, okay, you might know what is a voucher or a transaction basically. A transaction, in simple terms, any involvement of financial value for the business that we are maintaining accounts is a transaction. It might be any type of transaction which has involvement of financial value. So what are all the kinds of transactions that you will have in any business, whether it's a trading or a service business or a manufacturing business? You always do some purchase for your business. You always, when you purchase, you always make a payment for that purchase, whether it might be a cash purchase you are settling then and there, or it might be a credit purchase over a period of time you are settling that. So you are making payment. Then as a business, you are earning revenue, you are either selling the product or you are selling your services. So you are selling, there is a sales transactions. Against that sales transaction, you receive money. Okay, now to maintain your business, you are spending money to maintain your business. It might be rent you're paying, it might be traveling expenses, it might be your communication expenses or your printing and stationery, whatever the head that you want to spend money. You are spending that money to maintain your business. And you are also doing a lot more than just this to ensure that your financial transactions are properly recorded. Say example, one of your customers gave 10,000 rupee cash. Now tomorrow morning you go to bank and deposit that to your bank account. So there is an involvement of cash or bank. Okay, so these kind of transactions, or you might be passing some journal entries to ensure that your financial statements are properly maintained. So these are all the kinds of transactions. okay, which are recorded in your books of accounts. Okay, so the transactions can be cash or credit also. Okay, next come systems of accounting. So how do you different types of accounting? Okay, so typically one way of classification of systems of accounting. One is whether it's a single entry system or a double entry system. The other classification is whether it's in cash basis or an accrual basis. That will come later. First, let us understand what is this single entry or double entry and double entry system of accounting. So in single entry system of accounting, basically, so even before understanding this single entry or double entry, one thing that we need to understand is any financial transaction, okay, to complete the transaction, there are two aspects for financial transactions that we have to account. One is basically, it is called debit, the other is called credit. Okay, so we need to have, to complete the transaction, we need to have both debit and credit. Okay, so that is what it is, plus and minus. Basically, if you really look at in your accounts, one side there is a plus, one side there is a minus. So we call it as debit or credit or asset or liability or income or expenditure or the combination of any of those things. Okay, but typically in a small business, when you start a new business, when it is in a more of an unstructured way of doing it, when it is very small, okay, generally we tend to record only one side of the accounts, either debit or credit side of the transaction. So that is called basically a single entry. So like example, today I started a business with 10,000 rupee capital. Okay, and I want to do a flower business. So I want to buy and sell flowers. So my capital investment itself is 10,000 rupees. Okay, first thing is I don't use any computers, I don't use any mobiles, any other thing. My just a small business. I've got 10,000 rupee capital. Every morning I go to market, purchase flowers, come and sell in retail. So what do I do is I just keep one small diary in my pocket with one pen and I'll say, okay, today I've got 10,000 rupees. Okay, I went and purchased flowers. I'll just say flowers, 7,000 rupees, 3,000 rupees pending with me. Then I had a cup of coffee, I paid 15 rupees. Then I'll say, what is the balance pending with me? So that is how the accounts is maintained. And at the end of the day, I'll just say, okay, today I sold worth 4,500 of flowers because that is the cash that I've earned at the end of the day. And I'll say, this is the sales that I've made. And I'm just writing this in one small diary, which is in my pocket. So this is not double entry system of accounting. There's just one single entry system of accounting. And this is followed generally by a small business organization. Okay. Then when we come to what is double entry system of accounting is, basically it is much more systematic way of maintaining the records to ensure that end-to-end transactions are recorded and tracked. Okay, so like example, let me tell you. Let me take the same example. So I have started a business, a flower business with 10,000 rupee capital. Okay, but today, fortunately, I have Ajit with me. Okay, who will tell that, sir, you don't worry, sir. You do your business. Okay, I will help you in maintaining the records, maintaining the accounts. So while I do is same thing, early morning, I go to market, I go to flower market, purchase some 3,000 worth of flowers from that market. Okay, come, I had a cup of coffee, everything have come. But what Ajit will do is, he will meet me, okay, at some time, at 2 o'clock or some time, and I'll say, okay, Mahesh, today, how much did you purchase? What was the value of purchase? And he will ask me, Mahesh, did you pay money or you told, no, keep credit, I will pay you day after tomorrow? So how did you purchase this? So I need to explain him. I need to tell him, no, look, Ajit, in one shop I gave 1,000 rupees and he gave me the flowers, but in another shop, the owner was not there, but they told, okay, take this material, sir, give me after 2 days. So 2,000 rupee worth I've got it on credit. I have not paid that money. Now, this is how it gets recorded. Now, accordingly, Ajit will start recording as, okay, debit purchases, credit cash, 1,000 rupees. So purchase of 1,000 paid cash as a cash purchase. And he will make one more record. Okay, debit purchases 2,000 rupees and credit uh, Manish, okay, who is a flower supplier to me, who has supplied in credit, and probably I'm paying him after 4 days. Okay, so where there is both debit and credit that is recorded, that is called double entry system of accounting. And for all statutory purpose in India, everyone has to follow double entry system of accounting. Okay. So single entry system of accounting, very small business will follow. Say like example, those who are not even registered as business. Okay, so down the line in our office, there is one shop who does very good samosas and tea. Regularly we go to him. He need not maintain any hi-fi books of accounts or accounting or anything. He knows exactly where he's spending. He knows exactly where he is making money. So he just maintains in one single entry system in one small diary. That's sufficient. So these are the two different types of systems of accounting that you have. But please understand, as a statutory norms in India, we are supposed to follow double entry system of accounting only. Single entry system of accounting is not considered complete as per Indian statutory norms. Hope this is clear. Okay, let's move forward. Next, what is system of accounting? Again, there are two things. One is cash basis and one is accrual basis. So what is this cash and accrual basis? We understood, okay, what is single entry versus double entry? What is this cash and accrual basis? In cash basis of accounting, again, only if the cash is involved is getting recorded. If cash is not involved, when I say cash, it includes bank also. When cash is involved, then only it gets recorded. If the cash is not involved, it doesn't get recorded till the cash gets involved. But it is not true that in every transaction, cash or bank gets involved. Okay. So let me take an example. Let me take the same example of flour. So in the previous example, I gave you two scenarios. One, I purchased a flour in the morning in the market. I went and I purchased flour for worth of ₹1,000 from my supplier and I paid him cash. The second transaction, I purchased 2,000 worth of flowers and I didn't pay anything. It was on credit. So I told Manish, Baba, wait, I will give you after 1 week. Now, if I'm accounting these two transactions in cash basis, how do I account this? So first thing is, yes, it's very clear. I purchased by paying 1,000 rupee cash. So I just accounted it as debit purchase and credit cash. So and the account is closed. In the second transaction, where I purchased on credit, where the cash is not involved. So in cash basis of accounting, that even doesn't get recorded at all. Meaning, today I purchased it, I purchased worth 2,000 rupee, but I'm paying after 1 week. So the record of the transaction will get recorded only when I make the payment, not today. So the liability doesn't get created in the books of accounts. Only cash basis transactions are maintained. So this is not a complete way of recording the books, because looking at your books, you don't know how much of receivables or how much of payables, or what is your actual income, or what is your actual expenses, it cannot be ascertained in cash basis of funds. Say example, let me just give you one more example. All of us get electricity bill on probably on 1st or 2nd of the month. But Bescom in Bangalore says you can pay by 10th or 15th of that month. There is one cutoff date, due date. And generally, my understanding is everyone will pay on the last date of that due date. So if my due date is on 10th, I'll pay on 10th. If my due date is on 15th, I'll pay on 14th, something like that. But I have received the bill on 1st itself, 1st of the month. So when do I record this? Am I recording it on 1st of the month or on the day I'm making the payment? Effectively, in cash basis, I'm recording it on the day I make the payment, not on the day I received the invoice. Similarly, it might be true when you are selling in advance. Say example, let me give you an advance. Let me give an example. So one of the customer, last week Manish went to one of the customers, showed a software demo for them, and he collected the check for new license installation. He has collected the check for some 20,300 rupees. But till date, we have not even installed. The customer is saying, wait, Baba, I'll tell you, my computer has to come. I'm purchasing a new computer. When the day I get the computer, I will call you on that day, come and install. So I've not even raised an invoice. I just received that money, 21,240, and I've kept in my books of accounts. Okay, now the receipt is prior to actual transaction. So I have received money today, but I'm installing the software after 1 week. Now, as I'm receiving the money today, I'm supposed to record this. So what do I record? I'm just recording saying that I have sold this product in cash basis of accounting. Saying I received from Ananya Enterprises by selling the software. But I've actually, have I sold the software? No. Still, I have not raised the bill. I have not given him anything. But in cash basis, that is how it is maintained. Okay. Then comes accrual basis of accounting. So in accrual basis of accounting, how do we do? Irrespective whether I pay cash, I receive cash, the day the transaction is affected, we are recording the transaction. Irrespective whether I make payment or I receive payment, it doesn't matter. So in accrual basis of accounting, if you just go back to our example, when I'm making a purchase of flowers going to market, okay, so there was 2,000 rupee worth I purchased from Manish, which was in credit. So today we are on 16th of August. So today morning I just went and purchased, but I'm liable to pay him only on 23rd. So irrespective whether I pay today or I pay it in the future date, I'm recording the transaction on the day the event has happened and on the day the document is received, basically. So the supplier gave a purchase bill and he told on the purchase bill, he told it's a credit purchase and he has given me that bill. So I'm accounting it today only. I'm not waiting till I make the payment. That is in accrual basis of accounting. Accrual basis of accounting gives much more insight and clarity on the expenses booked and the income earned versus the receivables and the payables, which typically affects your balance sheet items. So is this clear? And according to Indian statutory norms, we are supposed to follow accrual basis of accounting for business entities in India. Hope this is clear. Okay. So let's move forward. Then comes the golden rules of accounting. So what is golden rules of accounting? Hopefully all of you have gone through this. Okay, probably your accounting master or guru in your college has grinded all of you, okay, on this golden rules. Okay, why we are getting back to the basics is very simple. If you understand this golden rules and if you start analyzing when you get a transaction, you know what to debit and what to credit. That's it. Okay. So the golden rule, so there are three classification of accounts. Okay, if we understand this, we should be able to get any transaction, we should be able to analyze and say, okay, how this has to be accounted. So it's a real account, personal account, and nominal account. Right? So can anyone tell me what is the rule for a real account? What's the rule for a real account? Can anyone put it on chat or can anyone unmute and tell me what is the rule for a real account?
So debit what comes in, credit what goes out.
Debit what comes in and credit what goes out. Okay, so is everyone agreeing to this? Okay, so somebody is, yeah. Okay, so debit what comes in and credit what goes out. So now you know, if it is a real account, what should be debited and what should be credited. So first thing is, what is real account? Okay, so I'm just reading from the book. Okay, for all our understanding. Okay, what is real account? So here it is written. I'm just giving you a classification. Real accounts are accounts maintained as assets owned or possessed by the business. Real account includes both tangible and intangible, meaning which can be touched and felt and which cannot be touched and felt. Examples are building, furniture, cash, purchases, sales, goodwill, trademark, intellectual property. These are all intangible assets. Okay, so these are real accounts. Okay, so if it's a real account where the account is real, then the rule applies is debit what comes in and credit what goes out. So you have to debit whatever is coming in and credit whatever is going out. So example, I purchased a motor car worth 5 lakh rupees. So what is coming in? Debit motor car, which is under fixed assets, and credit supplier. If I'm getting a credit, it's supplier. If I'm paying through cash, it is cash. Okay, generally it's supplier. Okay, because statutory norms you have to account in an accrual basis, so you credit the supplier. Simple. Okay, then comes personal account. What is personal account and what is the rule for personal account? Can anyone tell me what's the rule for personal account? Okay, so Kavya is saying debit the receiver.
Receiver, credit the giver.
Credit the giver. Okay.
Oh, I have to type it.
Okay. So debit the receiver and credit the giver. Yes, that's right. Okay. So first thing is, before we understand the rule, let us also read what does the personal account says. I'm just reading from the book. Okay, for the benefit of all, and see, these are all available in, you can go to Google, you can Google and you could do a lot of research on this, but simple understanding you need to know is personal accounts are the accounts of a person with whom the business is required to deal with. Personal accounts are further classified into natural personal accounts, artificial personal accounts, and representative personal accounts. There are three subgroups under this. So what is natural personal accounts? Accounts of an individuals or natural persons. Like example, it's a Ram's account, Krishna's account, John's account, Muhammad Saif account. So it's all individuals and they are real. Then artificial personal accounts, example, it might be any of your suppliers, Mahindra Club, or it is your ABC traders. Okay, because these are all entities basically. They are not natural. They are entities that is formed. Okay, then there are something called representatives of personal accounts. Basically, it relates to a particular head of expenditure or income. Okay, or a nominal account, and it represents person to whom it is payable or receivable. Example, outstanding salaries, prepaid insurances, etc. etc. Okay, so now you know if it is a personal, if there is an involvement of personal accounts, then what should be debited and what should be credited. So debit the giver and credit the receiver. So who is giving should get debited, who is receiving should get credited. Okay, then comes the nominal account. So what is the golden rule for nominal account? Yes, you're right, Pawan. Debit all expenses and losses and credit all incomes and gains. So you have to debit all expenses or losses that you're making, and you have to credit all incomes and gains, okay, in a transaction. So before getting into it, again, let me just read for benefit of everyone, what is nominal account? Nominal accounts are accounts where income and expenses are recorded. Example, sales or rent expenses or salary expenses, etc. All accounts can be broadly classified under the following 5 groups. Okay, so let us get into that later. Okay, so typically if it is an expense or an income, okay, which typically falls under nominal accounts. Yes, ledger accounts that you close at the end of the each accounting year. Yes, you are right, Sonam. That those are nominal accounts where you don't carry forward. Basically, you don't carry forward those things. Okay, so if hope you are clear on this. So once when you are clear on this, okay, then it becomes easier for us to take further. Okay, so some of the aspects that you need to be clear on the accounting principles. So the principle in which the accounts are maintained for any of the business entity is, first thing is it should be accurate. Okay, so to ensure that the accuracy is available and reliable, the data is reliable, meaning whatever things that we are accounting, okay, that data is relevant. So I don't want to take, say example, I'm keeping the books of ABC traders. And in ABC traders, I don't want to account purchases made by PQR traders. Okay, so that's irrelevant information for me. So it should be a reliable information which I can relay, and typically it's a time bound information. So for which period this transaction has occurred? Is it for the existing financial period or different financial period? It has to, the record has to be only for the existing financial period. Okay. So some of the things that you should have clarity on the principles of accounting. Then the concepts of accounting. So typically most of the things would have you either in one of the other aspects you would have gone through. Okay, and these are all some of the I call it as a common sense for any of the business accounting that needs to be taken care of. So first, it's a separate entity. We discussed on this. A business is a separate entity by itself. Then there should be a money measurement. Otherwise, it's not a transaction. Otherwise, it doesn't come under accounting. Say example, in my organization, okay, one of my employees got married. Okay, so what am I going to do with the financial accounting? Okay, so there is no money measurement in this. Okay, there is an event that has happened, but that is nothing to do with the money measurement. So it doesn't form part of the accounting concept. So to form an accounting concept, it should have a money measurement. And it is assumed it's a going concern, meaning whenever the business is done, okay, we always assume that it's an independent entity, it's a going concern, meaning this will survive for next 2 years, next 5 years, next 10 years. This business will go on. No one will say, okay, tomorrow morning I'll stop this business, so I want to do this. Okay, so the basic understanding is it's a going concern. Okay, and it's a cost concept. So what is cost concept? Always when we look at the financial transaction, okay, we look at from the cost perspective. So like example, today I got an telephone bill for 1,100 rupees. So first thing that I do is, I will always want to go and check what was my previous bill value. Was it in and around this value, or there is some exorbitant change? Previous month it was 250 rupees, now it has become 1,100. Then I have a concern, why it is so high, why it has gone up 4 times. So there is a cost concept in every transaction that we do. Say example, I am purchasing flour. Okay, if I'm into flour business and I'm purchasing flour, yesterday I paid 2,000 rupees and I got 20 kgs of flour. Today, for same 20 kgs, that guy is asking 4,000 rupees. So there is some issue. Either there is a supply and demand mismatch. So the costs have gone up. So I need to do some analysis of this. So this is called typically a cost aspect, cost analysis. Okay. Then there is a period concept that we discussed about. There is something called objective evidence. So for everything we look at the evidence. Okay, what is the evidence for getting this transaction? So like example, I bought a car for my business, paying 5 lakh rupees. What is the evidence? First thing is I need to have a physical car running. I should be able to see that car. Okay, that is one evidence. Second thing is the vehicle should have got registered in the organization name or my name. There should be a document for that. So there should be a registration certificate in our name. There should be an insurance certificate, and that insurance should have a valid dates. Okay, and that insurance should have the valid registration number, various things. So these are some of the evidence concept that we look at when we are making transactions. Then legal aspect concept. So typically, whenever the transaction happens, so that we may not follow in a day-to-day, but when we are doing a high value transaction, okay, we always want to follow the legal aspect. Are we legally doing the right things? Does all the documents are in proper? Is it okay? Okay, so you go through the legal aspect. Say example, I'm into flour business. Say take the same example of flour business. I'm into flour business, and all of a sudden I got an order from Japan to supply 2 tons of roses. Okay, for February 14. Now I'm one small trader in Bangalore who is into flour business, and all of a sudden I've got 2 tons of export order. First thing is, I would want to consult a legal person and say, okay, boss, I've got this order. Now, how do I execute this? I don't know the legal aspects of exporting a flour. So I get into the legal aspects. So this is some of the things that we need to be aware of. Then the accrual, of course, we spoke about the accrual accounting system, the accrual concept. Okay, when do we account, all these things. Okay. Then the last one before we conclude this. So what are the accounting conventions that we call? So first thing is, it should be a consistency. We should have consistency in maintaining the books of accounts. We can't say, see, look, in the month of April, I want to follow cash basis of accounting. From May, I will follow accrual basis. Then my boss will say, don't follow this accrual basis, man. Let's get into cash basis again. You come back to cash basis in the month of June. Okay, so this is not consistency. You should have proper consistency in maintaining of accounts. Okay, so first thing is you need to follow all the rules, all the statutory norms. Then you should follow the consistency. Say example, the consistency is it depends from business to business. What is the consistency? Say example, I'm saying in my business, the consistency is very clear. All payments are made on Friday of every week. I don't make payments every day. So all my payments for that week is clubbed and we are doing it on Friday. That is consistency that we follow. Okay. At any point of time, I don't maintain more than 10 number of stocks in my stock because I know that I have calculated my purchase delivery period and everything based on my volume of sales and the orders that I have. So that is the consistency that a business maintains. So there are certain consistency in accounting that we actually maintain. So that is very important. Then comes the full disclosure. We need to ensure that the reason for maintaining proper books of accounts is we fully disclose every aspect of it. We don't want to withhold any of the information. See, because we need to understand there are various stakeholders. Okay, so the owners or the management is dependent on the finance team. The finance is dependent on sales team. The finance is dependent on purchase department. Okay, so there are a lot of dependencies from teams to teams or person to person or stakeholder to stakeholder. So it's always very important that at every level, there is a full disclosure and notes that is available. Okay, and there is conversationalism and materiality aspects of it. So in a business, everything, okay, ultimately boils down to money or money's aspect. Okay, so we should ultimately convert all these things to a currency and say, okay, how my business is performing. Say example, I have a closing stock. I need to value this closing stock and bring it as part of my financial records. Okay, so all these things needs to be taken care, okay, while we look at the accountings. So with this we complete the basics of accounting. Hope this is clear. Now we can take any questions you have. If there are any questions with anyone, you could unmute, tell your name and ask the query, or you could put it on chat. So please, if anyone has any questions, we could take this. So does anyone have any questions? Okay, so looks like no one has any questions. So there are two ways for me to take this. One is I'm very happy that everyone has understood everything. On the other flip side of it is probably I was not successful in communicating to you. So probably no one has understood anything. So what should I take? I'm not very sure about it. Since there are no questions. Okay. So, Saurav Kayari, one of the participants is asking a question, when do we start TallyPrime? Sir, we will start TallyPrime not in this session. Probably from the next session we will start. Okay, so when we look at, when we start from the basics of TallyPrime, so during next session, we will also give you the complete topics that we cover on each of these days. So you will know on which day what topics will be covered. Okay, but we feel this was very, very important before we get into the product so that the concepts are very clear. Okay, so let's do one thing. What is the time now? I think we have crossed the time. Okay, so we'll ensure that the basics of TallyPrime we will start on Saturday. Okay, and we will take it further. So I will be here on the call for next 5 minutes. If anyone has any questions, you could either unmute and speak or you could put it on chat. Okay, and if I don't get any questions for next 5 minutes, we will be disconnecting this. Thanks everyone. Again, we will connect on Saturday at 4 o'clock. The next session is on, let me just tell you, on 21st at 4 o'clock. 21st of August, again, we are connecting at 4 o'clock. It's 20th, I'm sorry. 21st is, I'm sorry, 21st is Sunday. 20th. We will be connecting on 20th at 4 o'clock. Okay, thanks. Thank you, everyone.